Welcome everyone. Today we're going to talk about swing trading, a strategy that has been gaining popularity in recent years. So what is swing trading? It's a type of trading where you hold on to stocks for a short period of time, usually a few days to a few weeks. The goal is to capture short-term gains by taking advantage of price swings. Now, you might be wondering, why is swing trading important? Well, for starters, it's a great way to diversify your portfolio. It can also provide higher returns than traditional buy and hold strategies. Plus, with the rise of online trading platforms, swing trading has become more accessible than ever before. Swing trading is a trading strategy that involves taking advantage of short-term price movements in the market. Unlike day trading, which involves buying and selling securities within the same day, swing traders hold positions for a few days to a few weeks. This allows them to capture larger price movements and potentially higher returns. Swing trading differs from other trading strategies in that it focuses on medium-term trends rather than short-term fluctuations or long-term investments. It requires a combination of technical analysis and fundamental analysis to identify potential entry and exit points. Swing traders also need to have good risk management skills to minimize losses and maximize gains. Swing trading offers several benefits over other trading strategies. One of the key advantages is its flexibility. Unlike day trading, which requires constant monitoring of the market, swing trading allows traders to hold positions for several days or even weeks. This makes it easier to manage trades and reduces the stress associated with constantly watching the market. Another advantage of swing trading is its potential for higher returns. By holding positions for a longer period of time, swing traders can take advantage of larger price movements and potentially earn higher profits. Data supports the benefits of swing trading. According to a study by the Stock Traders Almanac, swing trading has outperformed buy and hold investing over the past 20 years. In addition, swing trading has a higher success rate than day trading, with a success rate of around 60% compared to just 40% for day trading. Overall, swing trading offers traders a flexible and potentially profitable approach to trading. John D. Markman's approach to swing trading is based on a combination of technical analysis and market psychology. He believes that understanding the emotions of other traders can provide valuable insights into market trends and help identify profitable opportunities. Markman also emphasizes the importance of risk management and recommends using stop-loss orders to limit potential losses. He advises traders to focus on high-quality stocks with strong fundamentals and to avoid chasing after quick profits. One of the most important aspects of successful swing trading is setting realistic goals. It's easy to get caught up in the excitement of the market and set lofty expectations, but this can lead to disappointment and frustration. Instead, take a step back and assess your financial situation and risk tolerance. Set achievable goals that align with your resources and comfort level. Another key factor in successful swing trading is managing risk. This means being disciplined about cutting losses and taking profits. Don't let emotions cloud your judgment and stick to your predetermined exit points. It's also important to diversify your portfolio and not put all your eggs in one basket. Spread your investments across different sectors and asset classes to minimize risk. In summary, swing trading is a highly flexible and potentially lucrative trading strategy that involves holding positions for a short period of time. By taking advantage of market fluctuations, swing traders can earn higher returns than traditional buy and hold investors. John D. Markman's unique approach to swing trading emphasizes the importance of identifying trends and using technical analysis to make informed decisions. By following his tips and strategies, traders can increase their chances of success in the market. Thanks for watching. Like and subscribe, and we will catch you on the next one.